This really does depend on where the global economy goes and how the New Zealand economy responds.
So can you give us, your statement is a little bit obscure there in terms of what the future track for the OCR is. What would you expect the OCR to trough at in this cycle?
Well, au contraire, I think our forecast is extremely transparent, and as transparent as one will find in any central bank around the world, where we have a projection for the 90-day rate, and we are deliberately not holding that to a particular numbers around the official cash rate. So you will have to do your usual interpolation on that there, Simon.
So do you think the markets are being overly optimistic in how far the OCR will track down then at the moment? Or are you comfortable with how the market is moving?
Well, I think the markets, given the uncertainty and volatility in the international situation, we have to assume there's a lot of uncertainty around the market numbers at the minute, and those will move around a lot as they see data coming through. We're currently seeing the financial market turbulence moving into real numbers in the real economies. So that's some extra information for us all, and the market has to absorb that. Generally, it's been depressing information. It's looking like the Q4 real economy numbers through our trading partners are much more depressed than had been felt before. But we'll wait and watch how that comes through, and I'm sure the market will as well. Those numbers will move around.
I was wondering to what extent, given the current international volatility and what's been happening with our exchange rate, and presumably it will be shifting as we speak, but I was wondering to what extent does that put some sort of floor under what you can cut, if it really starts sort of heading south like a migrating godwit?
The exchange rate, the New Zealand dollar, has been very well behaved through this period. It's pretty much reflected commodity prices. I don't know what it's doing right at the minute, but in fact, since we delivered today pretty much what the market expected, I suppose you'd say, on balance, you wouldn't think it would be doing anything right at the moment. So we'll obviously watch that, but the market's shown all the signs of being liquid and broadly moving as one might expect given the fundamentals in the economy.
So Dr. Bollard, at first glance the statement would appear to be slightly contradictory. On the one hand, you're talking about an expansionary monetary policy and the stimulus that gives to the economy, but also expressing concerns about, in fact, inflation falling below the bottom of the band. And with that, the implication that perhaps there's a need for rates to stay up. Could you perhaps explain that apparent contradiction?
Sorry, did you say expressing concern about rates?
Well, there's an implication about inflation falling below the bottom of your band, and hence that would imply rates would need to sort of stay up a little to remain firm.
No, we're not. We don't see as a real concern at the minute the likelihood that inflation might drop below the band, if that's what you're saying. There has been some talk about the risk of that happening in countries like Japan and maybe some other OECD countries. That's only it would take a lot to do that in New Zealand. We're not primarily concerned about that.
It does specifically mention the inflation falling below the bottom of the band.
I haven't got the exact words there, but we always, when we run our confidence intervals around our forecasts, those are quite wide confidence intervals, it's possible that it could temporarily do that. We think it's unlikely. Is it going to be a systemic problem for us in the setting of monetary policy? I don't think so.
You said there's a chance of further smaller cuts later. Given that there is a risk that the inflation could drop below the target band, why not front load everything now in a bigger interest rate cut?
Well, we basically just did. We have been front loading over the last two announcements. We haven't necessarily done it all, but we've done as much as we feel should be done given what we understand about the global economic situation. If we get unexpected and worsening news, then actually we, in contrast to a number of OECD countries, have got a lot of ammunition in this particular box. So there's plenty more that can be done. At the minute, that's not our judgment that big things need to be done, but we'll keep assessing that. And it is a very volatile situation at the minute.
Dr. Ballard, you're forecasting fairly rapid bounce back in growth. To what extent is that just because your forecasts have to take us back into growth, and to what extent are you actually expecting it to bounce back that quickly?
Well, if we see the sort of numbers that we've got in our forecast, then it's actually it is an interesting phenomenon that the faster and further the New Zealand economy falls, the faster, the jerkier and higher the rebound will be. And that's not just a forecasting or statistical fact, it's a real fact, and that's what history shows. New Zealand pulls out of these troughs and can pull out quite fast. Now, that's not always helpful because that can reflect some pent-up pressures and not actually reflect robust, sustainable, ongoing growth. We actually have got a forecast of 4.5% growth for 2011, and that's our best view at the minute. But is that desirable then? No, probably you would look for a gradual recovery in a more sustainable fashion. We do mention that because you just have to think all the time in the medium term ahead of what's happening over this year into the next couple of years. And that's the story that comes from recoveries out of the East Asia crisis, out of the tech wreck sort of period, and out of some of these previous recessions. And the further, deeper, faster it goes, the more it'll bounce out.
In that respect, our economy seems to be quite different from what's being expected in our trading partners. Is that correct?
Well, we are a bit different. I mean, one, we went into a very shallow recession early, and we've been in this shallow recession during this year. Two, we're small, so of course statistically you'll get much more volatility in those sort of numbers in New Zealand, and we can pull out fast. Three, we think we're flexible.
So if the growth pans out, as you say, and we get 4.5% growth in, is it 2010?
Is it 210?
Or 2011. 211. Would you then expect a rapid rise back up in the OCR if that pans out?
We see a future where inflation is reasonably constrained inside the target zone. I should take this moment to point out that our CPI forecasts have not got emission trading scheme numbers in them. We've taken those out, but it's very transparent. You can add them back in. With them back in, we get a medium-term inflation number that moves from 2.3, which is comfortable, to 2.7, which is less comfortable, given, of course, all the other volatility that goes on. So we'll have to wait and see some of that.
Would you expect that mortgage rates, particularly variable mortgage rates, would eventually fall below the longer-term fixed rates over the next year or two, which could, in theory, give the Reserve Bank a bit more monetary policy oomph?
That's difficult to say. It's going to depend on